The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. I hope everybody is having a good time today. We have something important happening. I believe we've made a lower low in spot crude oil by 10 cents from the low we made 2 days ago. I posted into the Tiger TV today the January crude oil going over the last, several months. You can see that we made that 1.27. The low today was at 36.56. The other low was at 36.66. So we made a lower low by 10 cents. Haven't followed through. Now, heating oil has not made a new low on this down move. It stopped at the 78% retracement. And also gasoline futures, as Mr. Z in the room have pointed out, have had a big move this week. We went from about $1.19 a gallon up to $1.28 a gallon in just a matter of a few days. And this is when, crude is, making new lows. So this complex could be ready to change. If you'll remember, we posted the information that our good friend Jim Flanagan at GAN Educators sent to us, showing us that the seasonality that we have for the crude oil complex turning in January is quite high. So we want to watch this very closely. We're also coming into a new moon tomorrow, and we will see if that's going to have any effect. But we're within the zone of it now because this is it comes in on the 10th. It can be a day or so on either side without too much of a trouble. That's the main thing. Someone's asked me a question about floor trading versus trading behind a desk. The reason why I went to become a floor trader, it was my 40th birthday, or my 40th birthday was coming up. I believe that's what it was. Anyway, I knew that these machines were coming because I had seen the desktops, beginning of desktops long before they ever came out. I can't remember. I think it was called a Pet Commodore or something like that. But I was just absolutely blown away when I saw this, and I saw it in the context of what was the name of the Quotron is where we got all of our data when we were at Drexel. It came through Quotron, and then we also had Bunko Ramo machines that clicked up on the board. These were the ones that were on the wall that click, 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 and had red and green lights. It was like a circus, but those were really good. If you ever have the chance to get one of those, get it, because they're really they're priceless. One of my friends in Chicago has a whole wall in his den built on one of those machines, and it's still operating. But the reason why is I knew I could see the swings in the market pretty easily. The thing that I was concerned about is when you had to put an order in, you had to pick up the telephone. It had to go to the order desk. The order desk had to go into the pit. The pit put it into his deck, and then that's how things were filled. And I wanted to make sure that all of the orders that were going through were filled properly, and that there weren't flashing of stops and things like that. So I wanted to go back to Chicago just to see if I could compete at that level and stand in the pit. And the first day I went into the pit, I got an out trade. Somebody said I'd sold something to him, which I didn't. Cost me $3,250. And the next time this guy came up, he was kicked off the floor because he had done it 3 times in a row. The third time was a charm, and then you're out of there. But after that, I just didn't want to go into the pits anymore. So all I did was I would write my order down, hand it to the order filler instead of going through the telephone, and I could see that. Well, when you're in the pit and you can hear the screaming and yelling, and you see the order flows stop coming in, you know that there's not a whole lot of things on the other side of the market. So that's the safest time to trade. And so I would watch to see when that occurred. But believe me, folks, I've mentioned this many times. I only saw a deck one time. I don't want to repeat the whole process of what I saw, but basically I only saw a deck one time. What was where the stops were, and they weren't being manipulated or anything like that. They don't have time to do that, folks. These guys are order fillers. They're $2 brokers. They got $2 per trade. If you had a 10 lot, they get 20 lots. Those decks were worth well over $1 million. And if they lost a deck to Dean Witter at the time or Goldman Sachs, it was worth a fortune. So they couldn't afford to be crooked. Now, that doesn't keep you from thinking that there were some things that were a little bit shady that go on, but that was just the business of money. But the order filling itself was the same. What we have now, unbelievable. I never would have believed what we have now with this electronic trading. I mean, it is so easy and so phenomenal that it's just you just can't get any better than this. The only problem is the internet, because when that goes down, we're in big trouble, because it's really that's where the real problem is going to lie if we get something like that going on, or someone hacks into it. That could really be bad also. But as far as the execution of moving stops and everything, it's truly really an unbelievable. And that's why we have volume like we do. When I first started trading stocks in 1965, the record volume on the New York Stock Exchange was only 5 million shares. That was broken in January of 1965, I believe. That was the day I met Ross Perot in California. I remember it very, very vividly. But now, they do 5 million shares of Intel in the first 5 minutes. So, this is the kind of volume that we're dealing with. Futures are the same way. It's just easier to trade. You don't need to be a floor trader at all. It's better to be at home where you can have it quiet and don't have the yelling and screaming. And some people don't like to be alone all day and trade. Well, that's just a preference of what some people like to have. To me, I don't stare at the machine. I basically try to look at what I think is going on, and then put my orders in and move on to the next one. That's really what I'm looking at. We've got we had a pretty big break yesterday in stocks. I wanted to show you why, someone's asked me a question, why I'm so infatuated with the New York Stock Exchange Index, and I'm going to try to show you right now. As most of you know, I really do like the Fibonacci numbers, and the patterns quite a bit, because this helps me describe what I think is happening with the market, at least from my point of view. And if you look at this New York Stock Exchange Index here on a daily basis, you'll see since last April, this thing has done a pretty good job of pinpointing some pretty good spots. The 618 retracement when we had the high up there around November 2nd. The bottom on August the 24th was a 1.27 expansion of the low from last October. Then we rallied up to the 61% retracement. We spent just about 1 day there. Then we backed off. Then we've rallied up to the 786, and then we're heading down to complete this Gartley pattern down here at 1,000 or 10,000 is what it appears to me. That's what it looks like. Now, in order to try to understand how to use the numbers of the Fibonacci sequence better, what I did was I put up a chart here over the last month. Well, actually, it's the last 2 months, and you can see what's happening here. After we made our beautiful 3-drive pattern back on November the 3rd, and this is an hourly chart. You see the market came all the way down, and what it did is it made a 1.618 expansion from the low in October. Then it rallied up to exactly the 786 where it made a butterfly pattern, and then it's come down to a 786 back on December the 4th. Then we rallied up exactly to 61% retracement to the exact tick. Then we went down, and yesterday's rally, after we had the low from the 7th, was exactly 61% retracement of that move. So we've had 3 lower highs here. All of them were exactly either 786 or 61% retracement. So that's what I'm doing. Now, I look at the futures the same way, but because the futures are so enamored by people. You know, you do get these places where they'll go beyond the point by emotionalism or a report coming out, but the numbers are still pretty good. So that's what we're looking at. So we've completed a big ABCD here in the New York Stock Exchange Index. So we'll see if that's going to be the case. The question someone's asked me is, you can't really trade the New York Stock Exchange Index. So what I do is I look at the S&P 500 and I look at the Dow Jones E-mini futures, and then I also look at the Nasdaq. And what I try to do is to pick the one that is the weaker. If I want to be a seller, I'd like to sell the weaker of those three instruments. If I want to be a buyer, I would try to be a buyer of the strongest of those instruments. Now, the last few days, the Nasdaq has been the weaker of those instruments. So whether that's going to continue on or not, you know, we'll have to wait and see. But this is what we're looking at here with this, folks. If you, I would going to put the bearish breadth out there again, but it just keeps getting worse and worse. I don't want to beat a dying horse here because it's really bad. You want to see a really negative chart, folks? I'm going to post one for you right now. Anybody can be bullish on this one. My hat's off to you. We did hit very close to the 786 retracement. We closed just below that. That could be the thing that holds it right here, but this is not a very bullish chart in the Dow Jones Transportation. If you'll look what happened since August, the market rallied up to an exact 61% retracement of the high of the Dow Jones Transportations, and this thing has been in a bear market for well over a year, and we're ready to take out those August lows without too much trouble. So we need to watch this very, very closely because it's coming down with a lot of power. This signifies that there's something wrong with the transportation stocks. Either the shipping is slowing down or the airlines are having not as much business possibly, and you know, they should be going gangbusters because of the price of oil. You know, they'll be flying those planes free pretty soon. But this looks pretty nasty on the Dow Jones Transportation Index. Now, if it holds here, we could get a pretty good rally because we did get right down at the 786 retracement. And since we're not going to be lower this morning, this might be enough to hold it. And with the new moon coming in, we could get a little bit of a bounce here, but it still looks bearish to me. The market's making lower highs, lower lows. The breadth of the market is deteriorating rapidly. And, we'll see. We go below the August lows, there's going to be people that are going to start paying attention to it. That's if we do get below those August lows. Now, that's a long way down in the S&P. That's more than 150 handles. That's, the old low was 1840, I believe, and we're at 2040 and change right now. So that's something that's going to take a little bit of time to see what's going on, but we'll watch it. The main thing on the agenda today is watch this crude oil because we made a lower low by just a little bit, haven't collapsed as of yet, and the heating oil is above the high, above the lows. Gasoline's rallied rapidly, so let's keep an eye on that.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and getting back to the question of floor trading. You know, that's there's not enough in the pit. There's still a few pits. There's a corn pit, I believe, and the options pit at the CBOE, but they're really pretty much a thing of the past. Just the New York Stock Exchange, you know, still has their floor, and that's you know, the standard by which the stocks the world look. So I don't think that's going to change very much, but most of that has gone electronic also. So you want to be able to understand that you have to get used to this, working with the internet, and hopefully these things will stay working. But you know, our economy is basically an internet economy now. Just look at Amazon, you can see, you know, what's happened with that. That's a main thing of what we're looking at. Now, we do have a currency that deserves our attention this morning, and that is the British pound. If you like trading with the trend, you'll be able to see here that the British pound is making a beautiful ABCD pattern up here at the 152 and change level. That completes the ABCD. We have this is still in a downtrend, as you know. Our overall target on this still is out at the 148 level on the longer term basis, but the British, the Bank of England did not They left rates unchanged today, so that sold the pound off a little bit. It's since rallied back, trading pretty much where we see it right now at the 150, 170. But we should have some resistance here at the 150, at the 152 and change level here in the British pound, because it basically equates to a 5-day rally with an ABCD formation. So that's the main thing. One question that someone's asked me about the Dow Jones Transportations, folks, it just means that there's a lot of selling in the stocks that perform the transportation. That's that's Federal Express, UPS, the airlines, the railroads. I mean, this is they must not be getting the business. Remember, folks, this thing's been going down for a year and a half. And that's not a good sign either. So we'll wait and see. Basically, it's those 100 and some stocks that run everything. Apple, Google, and the whole thing. I saw a comment yesterday that Google is basically what was on one of those indices. Google was basically 25 or 30% of the whole index. I don't remember which one it was. I wish I could. Someone emailed it to me to tell me, but I didn't write it down. Doggone, I sure would have. But it just showed you that how heavily weighted some of these things are. Just in the Dow Jones, look at that. It's the heavy weighted stocks. The IBM, the Goldman Sachs, the Disney, the Nike. Those are the ones that are moving it. The rest of these little smaller stocks, like Caterpillar used to be big. It's not anymore. But and then you have stocks like ExxonMobil, and I think we put that into the mix yesterday. I believe I wanted to show that chart because it's if you want to buy something and you're bullish, ExxonMobil is the one to buy. It's got a perfect Gartley pattern right where it closed yesterday, and as long as it can hold within a $0.50 of that, it looks like it's got a really good chance for a heavy rally. Now, all I can do now is try to find it, and unfortunately, I'm not able to find it. Where did I put it? It's got to be here somewhere. I don't know. We'll have to wait and see. Okay. And, believe me, I'll get that ExxonMobil hopefully by the break, and we'll take a look at it because that is just a perfect Gartley there. Oh, you know where it might be? Hold on just a second here. I might have it right here. Where would it be? Okay. No, it's not here either. Darn it. Okay, well, I'll get it hopefully by the break, and we'll be able to take a look at it. So look, now getting to the gold and silver, we're going to be talking about that before we get to the break here because we're not getting much of a big break here to the upside in the gold market. We're coming down, testing that 1065. Yesterday's high, that 1085 in the gold, was an exact within a $0.50 of the 786 retracement of the whole move down from that 1090 level or 1088 level down to the 1062 and then up to the 1085. That was a 786 retracement of that. And if we get an ABCD structure on that, that's going to take us down to the 1055 level. That's the possibility of what we could be looking at. Well, since we've been on the air, we did make a slightly lower low again in the oil futures. They did go down another 2 or 3 pips below the low, so we'll see if that's going to hold. We'll take a little break here. 877-927-6648. Oh, gosh.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. If you have any questions, it's 877-927-6684. This will be my last show of the week because I'm not going to be able to be here tomorrow, but I'll be back on the air on Monday. So we'll be seeing you then. But tomorrow you'll be probably entertained by one of the other folks here with some great information, I'm sure. So we keep an eye on whatever they're going to be saying. I want to go to the currency market for just a second here because we've had some pretty good volatility, as you know, in the euro and some of the others. We've already checked what the pound is doing and some of the other things, but the Canadian dollar on a really long-term basis is one that that really needs to be watched because we are up near this 136 and change level. We've actually hit that 136.35 level A couple of times it's still hanging right near that level, but this is the kind of trade that you really want to watch because it's a longer term daily. It's a perfect butterfly. The only thing, the caveats are there are these two wide ranging bars that we've had. Mainly that's because of, crude oil going down into new low ground all the time. So that's the main thing. As referring to crude oil, the best way to do this, of course, is to pick your shots where you don't have to, risk very much at all. The best way to trade it, of course, is to let the rally start and then buy the first Gartley pattern, after the bottom is formed. And if the market comes straight down like it did yesterday, you're not going to get a Gartley pattern, and that prevents you from being long. But we've made new lows while we're on the air here, so that it's not falling out of bed as of yet, but that doesn't mean that it can't. But the heating oil is still above the lows, and of course gasoline has been very strong. It's like we mentioned, it's rallied almost 10 cents a gallon here in the last several days. So we want to keep an eye on that. One of the questions that I've gotten several times over the past couple of days is the grain markets, and folks, I just think the grains are not quite ready yet. I'll be looking at those over the next few days. We've got a grain report, but I don't think it's going to mean very much. It's just primarily the summary of what's happened, I believe, but there could be a surprise or two. But the pattern is such that we still want to wait. Corn looks the best of all three of the grains. We mentioned we want to put that up and show you what we're watching here because we've had a long-term support line here in the which is basically a trend line based on all these Fibonacci numbers that we use, and we've hit that 786 twice in corn. We hit it once in June before we had the big rally that completed the ABCD in the growing season. Then it came down and tested it again in August, and it tested it again just in November. So as long as, and we're 15 cents, we're 25 cents above that number now. So that's really holding up really well. So we want to be watching corn here as the first one to be turning. Then I would be watching beans and wheat, but corn is the one that we're watching. But today I believe is the one of the grain reports, one of the crop. It's a final crop report, I believe, and that'll give us an idea of what. But they pretty much know what it is, and we got enough corn to last us through 2 millenniums, is what they're telling us. But that's usually, that's not the same of what we're going to be watching. So anyway, the stocks are actually holding up well so far this morning. We're going to see if they hold those levels. Right now, they certainly are. We up just a little bit, up about 9 points in the S&P. We're up about 60 in the Dow. So those numbers are holding okay so far. But if we go below the lows of the 2034 that we had yesterday in the E-mini S&P, then you're going to be looking at something very, very dramatic to the downside, and we're going to go down at least another 4% in the New York Stock Exchange Index to complete that Gartley that's down there at 10,000. And right now we're at, quite a bit higher than that. So we'll watch it very, very closely. Okay. The next one we want to take off, silver. Someone's asked a question about the silver. Still's holding up really good. There's just hardly any selling coming in silver. There's nothing in the open interest that tells us that anything dramatic is happening. And the fact that gold has not been able, we made that rally the bottom last Thursday and Friday when we rallied, $30-some an ounce. And all we've done now over these last 3 or 4 days is just back and fill, going down, testing to see if it's going to hold these levels. And that's the bottom line of what we're watching when we see this. So keep it in mind that if it breaks below 1050 in the gold, you certainly don't want it. That just means that these commodities are still heading down, and we haven't had a major bear market in this for the last 4 years, and we're probing for a bottom down here in some of these things, but it's certainly not clear yet. And with oil making new lows, daily just about, then these are the things that you want to, watch, relatively closely as far as if there is going to be a big turn. There's a lot of cyclical stuff that should happen right around the first of the year. And of course, we have the January effect, which means that, the small cap stocks gain on the large cap stocks, and the small cap stocks have held up relatively well. They actually have. We did hit the 61% retracement in the IWM, and then we backed off quite a bit, but they haven't given up nearly as much as the others have given up. So just keep that in your telescope, so that when we do get here in the beginning of the next year, we want to be watching to buy the corn and probably a few other things that looks like they would be acting pretty good. So that's the main thing that we want to be looking at. Now, the next cross rate that I wanted to share with you is the Swiss franc, and then I also want to do the Japanese yen, because that's been another one that has been a really big one. And you'll see that the Swiss franc completed the big butterfly up there at the 103 level. We've sold off 5 handles. That's basically the equivalent to what happened with the euro versus the US dollar. This is why when you were in that, if you happen to be short the euro at that time and you were looking at the cross rates of the other ones, like the yen and the Canadian dollar and the British pound and the Swiss franc, you could get an idea that the market was extremely oversold in the euro. So a rally was not unexpected, and we've certainly got that. We've broken over last week's highs, and then we've come back and we're testing those highs again. We pull back into that 109.50 level. Now, if we get below the 109 level, that would tell us that possibly this last little move might have just been a total false breakout. Whether that's going to be the case or not, one has to wait and see if what's going on. But these markets are getting they're getting a little bit jumpy, folks. When you look at the price of Deutsche Bank, what it's done, you're talking about the major bank of Europe and what's happening. Boy, oh boy, let me see. It doesn't look very good. Let's put Deutsche Bank up here again just to take a look at it, because you can see that this stock does not look very good on a long-term basis. We gapped down big time yesterday, and it's just really, it doesn't look very good. And we know they have problems. You can tell that since last February of February of last year. It's dropped 40%. So they start having problems, long time ago. So we'll wait and see. Okay. All right. One other question someone had. I wrote it down here. It was about ExxonMobil, and I wasn't able to get that chart up. Doggone it, folks. Well, use that as your homework. Go look at ExxonMobil. It's got a beautiful Gartley pattern right near where it closes, around 75 and change. And if you feel like you wanted to go long oil, ExxonMobil would be the one to go. It's perfect. It's got a 61% retracement, exactly at an ABCD coming off the lows of August 24th. So if you want to buy an oil stock, ExxonMobil is the one to buy. So that's it. I was being corrected here. Mr. Z just told me that the crop report came out yesterday, so the prices haven't moved very much. So I'm assuming that not really a whole lot is happening, with that. So we'll see. We've got the overnight high in the S&P was at 205.50. And that could certainly be an area where we could have some more resistance if we get that. We got the Dow up about 75 now, and the Nasdaq is moving higher, and so we bounced off that. The 2044 level was a nice 50% retracement of the move we had yesterday. So that could be an area that's going to be some strong support. But remember what happened yesterday, folks. We had a huge rally. We rallied. We were down. We went from down 30 to up 30. Well, no, we went to down. We're basically unchanged. We rallied up 30 points. The market stopped exactly at the 61% retracement at 2077, and then we went all the way down to 2034. So the rally back here, you want to watch to see what that 61% retracement is, and that'll give you a pretty good idea of where you should be when you're if you want to look to be a seller. Because that's the area we're to be watching. The ABCD on this move, I believe, measures to new high, which would be for the day, which would be at 2056. So the overall pattern of the move still looks bearish from the standpoint that of looking at, we're having lower lows and lower highs. If that's not a downtrend, I don't know what is. If you just look at that New York Stock Exchange Index, we're seeing lower highs and lower lows. So that's a downtrend. That's basically the bottom line of what we're looking at. So we'll keep an eye on that. Okay. Let me see. Any other questions? Nobody has any questions for me today? I should have another contest about the wristwatches or the clocks and stuff. The answers came in pretty close, but there was only one or two that were very, very close. But I will share with that the clock faces when I get the final answer. I've only gotten pieces of it. All I know is that it's based on something going back to Leonardo da Vinci, and it's all based on sacred geometry. It has nothing to do with other advertising, and I don't understand why all of the clocks are that way, but it's going to be revealed to me. And no, I don't know the total answer either, but I know part of the answer. And it has nothing to do with JFK or Lincoln or any of that other stuff. It has nothing to do with that at all. Or the fact that it's a smiley face, or the fact that it's shows the brand name of the watch, because that's not the case, because some of the brand names of the watches are at the bottom of the watch, like Rolex. Others are at the top. So, we'll see. Anyway, it's an interesting premise, and it's I've seen part of it, and I can't wait to see the rest. The person that has done this has invited us to go to London as his guest, which we will do in the spring, and that's when it's going to be revealed to me. And he's one smart cookie. So, okay, let's get back to the oil market. Folks, we're very close to making new lows again in the natural gas. The fact is, we're testing this double bottom here one more time. We're probably not there yet, but we're getting closer to it as we go. Would be my guess. We'll have to wait and see. Just keep your eye on it, because you got the whole world is bearish this stuff. If you don't believe me, just turn on CNBC or Bloomberg, and I swear within the first 5 minutes, there's going to be an article or a commentary about oil prices going lower and everything. That could be what's pushing these transportations down. But the main thing is that they are going down. And if the transportations are going down, folks, they're going down in the context of a perfect scenario for earnings. You got their biggest cost is fuel, and the fuel costs are dropping like crazy, and yet the stocks are dropping. Someone's got to explain to me how that can happen. And if you take out all of these bull stocks that we're looking at and just look at what's really going on with the New York Stock Exchange Index, you should be afraid. You should be very afraid, because this market doesn't look very good. It really doesn't. I mean, there's certain stocks that look good, of course, but there's others that don't look that good at all. Oh, we got a caller in. Thank God. Jim from Florida. Hi, Jim. How are you?
Larry, how you feeling?
Feeling great.
That's good. That's good. I wanted to talk to you. I've been averaging down on platinum coins. You can't find them from a dealer. The only place I've been able to buy them has really been at Everbank. And last batch I bought was at 1,005 per coin. I guess my question would be: you're saying if gold doesn't hold 1050, then just back off. But
well, I think so. I think you've got to respect that 1050 low because of the fact that it came in so perfectly, and we did get a good rally off of it. That doesn't mean it's going to hold, but you're a long-term investor, and maybe gold's going to go down to triple digits, down to 950 or 850, something like that. But and if you're buying coins, those are investment coins. Those are not trading coins. That's the way I look at it. I've always looked at it that way. In fact, I bought coins, during when it was coming down from 2000. So stay with us, would you, Jim?
I will.
Yeah.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Our friend from Florida on the line. Jim, are you there?
Yes, I am, Larry. And I didn't
we're talking about platinum coins.
Yeah, I looked at the chart. Platinum was $12.90 on second week in January, so it's been downhill all year.
Yeah, that's a huge drop, and it's basically it's a jewelry metal, of course, but it's also an industrial metal, and that's what's happened to all commodities, and it's amazing to me that stocks can be even where they are, given the fact that the manufacturing sector, at least in China and some of our area, has dropped a lot. So that's neither here nor there. That's what we're looking at anyway. So we'll wait and see what happens to this.
I guess it's a good predicator of what's going on with auto sales, because you look at these auto car lots, they're just stuffed with inventory every time you drive by them. So it's very interesting to see what's going to really turn after the first of the year.
This is true, and the car sales have been. I mean, I couldn't believe that they had sold 18 million units. I remember just a few years ago, 12 million was the benchmark, and look at where we are now compared to 2009. There was a day in 2009 when the market was collapsing where General Motors only sold 10 cars in the whole country.
That's amazing. Well, they're basically they're doing the same mistakes. I mean, they're talking 84-month car loans. It's crazy. Just get somebody in that seat and move the metal.
Yeah, well, that's what it's all about, is get the inventory out. So.
But anyway, you said 1050 would be gold, and then next stop, target will be 990.
Below 1050, it's probably going to break. It's going to go to triple digits, would be my guess.
Okay.
The problem is the trend is so strongly down in the rallies that we're getting. We should have probably rallied more than $35 off that first low, and the fact that we didn't get any higher right away. We've been down 4 days now since last Friday, and that's another sign of some weakness. So those are just things that I'm just keeping an eye on.
Well, if I don't talk to you before, have a Merry Christmas and have a good weekend, and we'll talk to you soon.
Thank you, Jim.
Take care.
Thanks for calling in. You bet. Okay, folks, keep an eye on the S&P, because if we get below 2034 in the cash or the futures, and we're switching over from the December to March now, so there'll be a change of about 7 handles. So we'll see you all Monday. Live every day in an attitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.